Hi, I'm Sharon Winsmith, a tax attorney, active investor, and your go-to resource for proven investment and tax planning strategies. In this video, I'm going to talk to you about why I am still doing an SBLOC in the current interest rate environment. I want to start by saying thank you to everyone for your nice comments to my videos and your likes. I really appreciate it. Hearing from you really makes me happy and kind of fuels me to keep doing this and do what I do. I don't really make a lot of money at this point. That's not why I'm doing it. But I want to educate you on the strategies that I've used to help me achieve financial freedom and the strategies that I've worked my entire career with uber wealthy people to implement to help them build wealth while paying little to no tax. So I'm going to talk to you about why I'm still doing an SBLOC. I've seen some crazy stuff said out there. People are saying SBLOCs don't work. They're quoting some crazy interest rates like 12 and 13%. Yes, we are in a higher interest rate environment. I do recognize that. I used to pay a lot less on my SBLOC back in COVID times when interest rates were a lot lower. Yes, they've gone up. They will not stay that high, but I'm going to explain to you why I think SBLOCs still work and why I'm still using this strategy. So I want to start with what an SBLOC is. I'll link below to my video on the intro to SBLOCs. If you don't know about SBLOCs, if you haven't watched that video, I would highly start by checking that out. SBLOCs are a great wealth planning tool. I think this is probably, when you think about secret tools that the wealthy use, this is probably the number one thing that I wish I had known earlier in life. This is something that I hear a lot from my friends that are wealthy and very sophisticated investors. They say, stop telling people about SBLOCs. That's, the secret tool. And when the word gets out, they won't be good anymore. But I think it's important that you understand this isn't stuff you're going to be taught in school. I was a finance and economics major and nobody talked to me about this kind of stuff. Nobody, I never heard this. CPAs, financial advisors, they're not talking about it. But SBLOCs are a great investment strategy and a great way to build wealth while minimizing taxes as well. So what is an SBLOC? It is a loan against your public stocks. So if you have a portfolio of stocks, you can actually borrow against those stocks. It's called a securities-backed or securities-based line of credit. And that is it's a straight up loan from your brokerage. So, let's say you've got a brokerage account with, $2 million. You can actually take an SBLOC usually up to 50%. So you can actually borrow $1 million against that portfolio with your stocks as collateral on that loan. So that is what an SBLOC is. I'm not going to dive into that in more detail. Check out my video about intro to SBLOCs, and I have a ton of other videos on SBLOCs as well. They're very important. You need to be careful with anything. Yes, this is debt. This is a loan. You have to think about repaying that debt or what the consequences could be if you have a margin call or something like that. This is not something that you should do if you're new to investing or new to financial concepts. But it's definitely something that if you want to build wealth and you want to do it efficiently, you should start learning about and seeing if this is a good strategy for you. So I'm going to start with what is the current rate I am paying on my SBLOC. I have seen such crazy things said by people. I am currently, at the time of recording this video, paying right over 6%. Back, during COVID, when interest rates were low, I was paying less than 2% at times. So your SBLOC is a variable rate. So yes, you can get yourself in a lot of trouble if you don't understand that. The rate can change tomorrow. You don't know what it's going to be because you don't know what's going to happen to interest rates. So you need to be very careful. You need to be smart about where you do your SBLOC and how you do it. I hope you're not doing an SBLOC at Schwab or E-Trade or somewhere like that, because yes, those are the people that are commenting saying there's 12, 13% interest rates, SBLOCs don't work. That's because they didn't know what they were doing when they did it. You do not want to do an SBLOC somewhere like that because you are probably paying 12 to 13% right now. That is a crazy rate. That's a rate I've seen on distressed real estate right now. So no one is paying that is doing this strategy properly. I am not paying that. I'm happy to pay 6%. Yes, I wish I was still paying 2%, but I invest the money that I take. When I take my SBLOC and I take that amount, I invest that into a secondary asset. The returns on that asset are far exceeding 6%. They are, usually above 20%. There are some that are a little bit lower. They're tax efficient, so I'm not paying any tax on most of them or a lot of tax on any of them. I don't make investments that, are not tax efficient. So I am happy to borrow at 6% all day long. So, you need to understand that 6%, if you think 6% is a high rate of borrowing, then you probably are new to investing. So think about if you're going to go out and buy a business. If you were going to buy a business during COVID and you were taking an SBA loan, those rates were closer to 6%. That was an excellent rate on an SBA loan. Now those rates are well above 10%. I think 11, 12% in some cases. So it's probably unlikely a lot of people are going out and buying businesses right now where they need to get financing like an SBA loan. However, I would be more than happy to buy a business and fund it through an SBLOC. That's something you need to understand. SBLOCs, if you do them at good, you want to do it at a quality brokerage that offers low rates of returns. SBLOCs are always going to be either the most or close to the most competitive interest rate out there if you're doing it, at a good bank. So, it's the same as mortgages on your house. If you're going to go out and buy a business, the first places you should look to borrow are not SBA loans, not going to your bank to get a business loan. The first places you should look should always be SBLOC and mortgage against your house, or, if you have real estate investment properties, taking out, mortgages on those as well. Those are always going to be the lowest cost of borrowing. An SBLOC strategy, it's important to understand this is an implementation of buy, borrow, die. I'll link below to my buy, borrow, die video. It's 40 minutes. You've got to understand that strategy. If you don't, you've got to invest the time into that. That is the most important tax planning strategy. If you're someone who wants to build wealth efficiently, you need to understand buy, borrow, die, and SBLOCs are, one of the best ways to, especially for everyday people like us who aren't, Jeff Bezos, Elon Musk, for example. These are the best ways for us to implement this strategy, I think personally. So SBLOCs are ways that you implement buy, borrow, die. The best way to do an SBLOC or to do buy, borrow, die with an SBLOC is to use the double dip approach. So with the double dip approach, what I'm doing is I am borrowing against asset one, in this case, my public securities, my brokerage account, and I'm going to invest in asset two. So the way that works is that it's really quite simple. The net return, and I mean post-tax expenses, everything on asset two needs to well exceed the SBLOC interest rate. So this is what I was talking to you about before, where I am happy to pay 6% all day long because the return I'm getting on my investments on average well exceeds 20%. If that's not, I understand that's not realistic for most people. If you're not a qualified purchaser, or especially if you're not an accredited investor, it's going to be very hard for you to get that type of rate of return unless you're someone who just owns multiple businesses or a business owner on your investment. So I'll be realistic. I understand there's a lot of people who aren't at those thresholds yet and don't have access to those types of investments that make it easy to get those, 20% plus returns. But if you're not getting 10% on your returns on average every year, you are not doing something right. The S&P 500 on average gets about 10%. So if you're not doing that at least or better than that, then you are not doing something right. So are you happy to borrow at 6% and invest in something that's giving you 10%? Yes, I would still do that. 6% is the rate you're paying right now. It's probably about as high, as you're going to pay. Interest rates will hopefully go down. They can't stay high forever. We'll have the biggest recession we've ever had. And then, that could be great because interest rates will go down. So obviously I'm not saying a recession would be good, because I know it creates a lot of hardships for people, but it can also create, some of the best investment opportunities if you're prepared and know what you're doing. But 6%, at the highest rate that I'm paying, am I happy to borrow at that pre-tax? I am going to get a tax deduction for that interest if I'm investing that money, if I'm using that for investment purposes or I'm using that to buy a business. So I am happy to borrow at 6%. And I'm, if I'm getting 10% plus returns on that. So that is why SBLOCs still work. What is critical is that you are shopping around for low interest rates. It is a big mistake if you did your SBLOC at E-Trade or Schwab. If you didn't shop around or be prepared, you probably went out and you took your SBLOC when rates were really low and everybody was offering a low interest rate on SBLOCs. But that is a very different situation. I think Schwab's rate is double what I'm paying right now. I do mine at Interactive Brokers or IBKR. That's, I think of that as the SBLOC bank because I think that's where, most people I know that are using this strategy like to do their SBLOCs. There's other banks that offer competitive rates. IBKR is usually about the lowest. There might be a few, that offer just slightly less, but you got to be careful about where you want to make sure you're using a legitimate brokerage account or brokerage firm because, there can be issues with that. You don't want to just do it anywhere. So be careful with that, but make sure you are shopping around for low interest rates, because what is going to happen is that, you're going to kind of get stuck, right? So if you did your SBLOC at Schwab or E-Trade or somewhere that has really high interest rates right now, it's really difficult to move that account when you've got the SBLOC, right? Because you've got your outstanding debt. So it can be difficult or it can be impossible in some cases to move that account. So you've got to be smart before you do it and make sure you are shopping around for not only a place that has low interest rates today, which, or the lowest interest rates today, but is going to, continue to do that, because these are variable rates. The other thing that, you need to be careful about is that if you're going to do an SBLOC, you're not required to pay interest currently. You're not required to pay principal. Most people leave the principal outstanding. Some people just like to repay it for, psychological reasons, but you don't technically have to repay the interest, but that's going to accrue daily. So if you don't know what daily interest accrual means, I'm not going to explain that to you, but you need to understand these financial concepts. You need to be careful. It's not just 6% of whatever I'm borrowing. If you're going to let it accrue, it will be a little bit higher than that. So just be careful. I've seen some people say some crazy things about SBLOCs. I've seen people compare it to credit card debt. I think that's because of the daily interest accrual, perhaps, and the fact that you're letting the interest accrue in a lot of cases. But be careful, know what you're doing. It doesn't mean you can't use a strategy with letting the interest accrue. And, I know people who don't pay down any part of their SBLOCs. You don't technically have to. You need to decide what strategy works best for you and what you're comfortable with and what you're, quite frankly, at the level to really understand before you do this. But, you need to understand that there's a lot of just misconceptions about this out there. There's a lot of people who are angry because they did it wrong and they did it at Schwab and they're paying 12 or 13%. So they want to tell you that you can't do it because it doesn't work. Just because it didn't work for them, because they didn't know what they were doing when they did it, doesn't mean that it doesn't work for you. So again, you need to think about this in the concept of investing. I don't care if I was paying 50% interest, but making 200% returns. I know that's crazy, but I'm just saying conceptually, that would be a great strategy, right? So people just can't wrap their head around the fact that you can use debt and you can use debt at 6% and still be better off, much better off at the end of the day by using the SBLOC strategy if you're going to do it properly. I don't know why conventional thinking around that is just that that's bad. But what you're doing here is the arbitrage. It's the difference between the post-tax returns on your secondary investment as compared to the post-tax interest you pay on your SBLOC. It's really not more difficult than that, but there are a lot of nuances that you need to understand before you start doing your SBLOC. Be careful where you do it. Where you do your SBLOC is very, very important. So hopefully you found this helpful. Hopefully this addresses a lot of misconceptions out there and a lot of, just wrong statements I see made about that. SBLOCs, I'm still using it. I still think it's an excellent strategy. It works great for me. It may or may not work for you, but you need to understand what's going on and why people like me are still using this strategy and still think it works. So hopefully you found this video helpful. If you did, please like the video and subscribe to the channel.